Monday 3rd August 2026. This is the first day of August. It's on a Monday. So I'm gonna go straight to this 1 hour chart. If you listen to my recording on Friday, I talked about these relative equal highs here. Apparently, we stabbed those relative equal highs here with this wick here from this is the regular trading hours open. That is the open at 9:30 New York. My time is normally at 4:30 in daylight savings time. Actually, no, the opposite of daylight saving time. So I'm annotating these relative equal highs here because that's where we're gonna trade into. So we've opened up today this new week with the new week opening gap. That's upper limit balance on the daily chart. Remember, we have this here in the regular trading hours open. In the afternoon, we'll have to visit that here because there's a black hole. Black hole not really a PDRA, but it's something like where price is gonna draw into. But first of all, we are in Prelondon. We've just opened up midnight New York, and we are 23 minutes into this time. So if you look at this here, this is relative equal highs, and price likes to draw into those relative equal highs. So we've opened up. You can see here, premium opening new week opening gap, and we are trading higher. So the bias is bullish. So from Friday's trading, you can see here at it's 4:30 my time, but in the New York time is 9:30. That is the regular trading hours open for index futures. We opened up right there. This line here was last week's midnight New York opening on Monday. So opened up right there. That's not really a coincidence. Ran high, swept out these relative equal highs here. We did not reach into that high, and then immediately we crashed. Anybody who was trying to buy it, trying to chase it higher, they crashed them, ran below these relative equal lows here, ran into this new week opening gap, and then it started to stretch higher. On Friday afternoon session, I was trying to take on a stab on a long, but it went lower and closed out nearly on this new week opening gap low. This new week opening gap is from last week. So this is a daily chart. This was last week on Friday, Monday, Tuesday, Wednesday, Thursday, and Friday. And today we've opened up on Monday on a new month, on a new week. And I'm looking at those relative equal highs here. So you can see the new week opening gap here from last week, and then we have also the new week opening gap here today. So we are in August. Throughout July we've been running lower, and now on last week on Thursday, sorry, we ran higher. So I was targeting this bullish order block here from last week on Monday, and we ran into that right there. We ran through it, ran all these sell side, went through this May low, and then we had this run higher. So right now I'm looking at this week, and we've opened up on that new week opening gap. There I'm looking at price try and reach into Friday's high and those relative equal highs there. So let's look at a 1 hour chart once more. So you can see the 1 hour chart, we are bullish and it's really consistent with those higher prices. Let's go to a 15-minute. So 15-minute, you can see the open there. This is a huge new week opening gap. I will annotate that now. So that's what we closed up on. And this is where we've opened up today. So that is right. And then we're gonna use these. It's now red, and then I'm not gonna fill this here, and then I'm gonna extend this out to probably the end of a bit there. So right there, and I'm gonna annotate the midpoint of that gap also, and it's right there. So I'm gonna take this here because they're the same idea, and I'm gonna put it right there. So this here I have to extend it to today. 8th and 3rd midnight. So there we go. So we're gonna go straight to the 5 minute now. And I'm gonna look for higher prices. So I've already talked about how this is a black hole and price will draw to this here, especially in regular trading hours that the New York Open on of index futures. That's what I want to see it draw into. So we have the buy side right there together with this high here that has been formed recently, and I want to see price to start drawing into this high. So that is the buy side. It has not changed. 76, 79. Okay. So I'm gonna make this a little bit bigger. You can see these candles here. So 0 GMT, we've opened up and mentioned this new week opening gap. We've been running, we ran kind of like lower, trying to run into this volume imbalance here. And now we opened up right here in Asia, did not do much of a run lower. We had this consolidation here, ran lower, took out this low and this low here with the wick, and then start to move higher. Lower, I mean higher low here, moved higher, and now we've been moving higher until now. So I mentioned this high here. That's what I want to see price draw into. Currently that is 609, and you can see we're moving higher. So any inefficiency here that is going to facilitate these higher prices, I do not see any unless it's this here that is also embedded with the new week opening gap. So we did not run into that inefficiency. So that means something. So we're running higher, kind of like a short retracement here, but still a higher low than this one here. We're running higher. Relative equal highs here. We ran into those, and now we are here. Midday new open here on this Monday. You can see I've also annotated that. We're running higher. There's a very small inefficiency here, but I'm also waiting for this 5 minute candle here to close so that we can also see these inefficiency here, and there's also volume imbalance here. You can see this candlestick close here is 28,549.33, and this open here 28,549.46. So there's a very small difference in these macro points. So 1 hour we are running higher. You can see that buy side, that is the Friday high that I've talked about, and I want to see price draw higher into that. 5 minute, you can see this high here. That's what I want to see, and then these are those relative equal highs on the 1 hour chart from last week, together with Friday's high, and at the pull of buy side that I want to see price draw into if we're really bullish. And if it wants to be interested in drawing into this new week opening gap, I want to see it run to those highs first before it goes into this new week opening gap. If it does not run into these relative equal highs here and it runs deep into this new week opening gap, then we might visit these relative equal highs here in the regular trading hours open for the index futures. So we have this inefficiency here. I want to notate that because it's also embedded with the midday New York open, so that is important. So I want to fill that and then extend that out to extend out to 1 hour. So I want to also take the midpoint of that inefficiency. Right there. So again, how we read inefficiencies. If we're really bullish, I don't want to see price spend a lot of time inside this inefficiency. I want to see it touch it and then start to draw higher. If we go through this inefficiency here, then we might be visiting this low here and probably even these relative lows here. So we have either this buy side or this new wick opening gap, and you can see it's very huge. But now that we have consistent price moves in London, I'm gonna trust my gut. I'm gonna trust momentum. And what's the momentum? It's obvious, it's bullish. And we have this buy side together with these relative highs here that I talked about even on Friday. So this inefficiency here, this buy side imbalances and efficiency is trading. We're trading at 28,555. So this 550 level there. If we go higher, 20 points into 550, that is 570, and 570 is not even close to this buy side. This buy side is 576. Let's look at the exact level. That candlestick's high is 28,576.61. So it's at 76. So if we buy 550, we'll not even get into this buy side. So below 550, there is 530. 530 is below this low here, and this low is 530.83. Exactly at that level. So I've already talked about how I want to see price trade around this inefficiency. And I've already mentioned how the bias is bullish, the momentum is bullish. And I've already talked about how I want to see this inefficiency react to price. Let's look at a 15-minute chart here. You can see the 15-minute chart been trading higher. We had one down close when ran higher, another down close ran higher, had a swing high here, ran higher. So you can see where we've closed on this 5-minute candlestick. This is good. So this is still encouraging me to be expecting higher prices. So what I'm looking at is how much time do we spend inside this inefficiency. So best case scenario, we want to do something like a manipulation and then go higher. I want to see it run below this low here and start to trade higher. But it has not done that, so I'm expecting higher prices. We've had 2 down close candlesticks. Now we're running higher. So this candlestick's low is 553.48. We did not even touch the 550 level. So if I were to look at something on the daily chart, I've already talked about this daily chart, but Once more, you can see from last week, this was Friday, Thursday, Wednesday, Tuesday, Monday. We opened up with this new week opening gap. It was a premium trend higher above last week's, not last week, but one Friday high, and then start to move lower. Move low on Monday, move low on Tuesday. You can see Tuesday we ran Monday's low, and then Wednesday did not even run Tuesday's high. We ran into this week here and closed out on that low below this low here on Wednesday. So on Friday, on Thursday, on Friday we opened up here, never even looked at that low, and then we ran straight up higher on Thursday, and then Wednesday's and Tuesday's high. On Friday, although we have a very down close, a down close candlestick, but a very small down close candlestick, opened up, ran higher. We ran Monday's high. This high was 20,603.25. This high is 20,603.29. Very, very little bit run above that high, and then ran lower, closed up on the low. So that's very interesting. So we've opened up new week opening gap. My interest is on this Friday's week. Let's put a fib there from that low to that high. The midpoint of that week is 394.56. So that 394 level is very important. You can see also the midpoint of this week here that I was looking at last week, 393.60. So that 390 level is very important, especially the 400 big figure. Very important. And price will to try to draw into that. Now that we have the new week opening gaps overlaying there, price will draw that in the future. So as I'm back on this 5 minute, I'm spending a lot of time inside this inefficiency. I just not really trying to make any move higher. So this is we're gonna judge that in the next 1 minute where it's gonna close. So sometimes Mondays can be difficult. I've had to trade one Monday with this method here of trading, and I was wrong. Only one Monday, and I traded with my final account. So I don't really have a lot of experience on trading Monday with this method, but I think it works. I've backtested it. I've looked at it not really on Mondays, but from last week on Monday it was a very nice momentum. So you can see we closed right on the midpoint of that inefficiency, and now you can see we've opened. We are trading lower. Now, with the fact that we went above these highs here, we can at least draw lower, even take out this low. But that's not something that I was expecting for a very bullish run higher. So this is the last candlestick for this 15 minute, and I'm very much interested in where the next 15-minute candle is going to trade into. Are we going to open up and then have a down close, or are we going to open up and then start to trade high into this high here? If price has an interest to run into this new week open gap here, it can, because we have sell down here. I want to see it run down there with speed, and also we have this relative equal lows here. So if we close below this inefficiency here, I will annotate this low here and this low. These lows are around 517, that's 520s. So that's important. So we're trading at 550s. We've run into that 550 level, and we are kind of like want to run higher now. Let's take this from up here and draw it into there. So these are minor buys, a liquidity pool. This is the elephant in the room. So we're remaining with 1 minute, and we're gonna see what this will close on. So I'm really interested in where the 750 candlestick is gonna trade into, and you can see how it's pushing higher. You can see where that candlestick has closed on the midpoint of that inefficiency that I highlighted. So we've opened up. So another thing that is disturbing, we're spending a lot of time inside that inefficiency. So that can really change the narrative, or it can draw a lot more lower than we expect, and then maybe start to trade higher. So I talked about that 20,550 level. I'm not going to buy it unless I'm 90 to 100% sure that it's going to trade higher. And the way it's behaving now, it's not really the characteristics of going higher. It is indecisive. But I'm still expecting higher prices because we've closed on the upper half of this inefficiency. The wicks can do the damage, but once it starts to trade on the upper portion of this inefficiency, without spending a lot of time on the lower portion of that inefficiency, then I'll be expecting higher prices. But what is it doing now? Exactly the opposite. So that's not really a higher percentage of, if I'm gonna be buying it, I'll be right. That's the opposite. So still gonna wait and see where they push it into, especially in the next 4 minutes or so, because there's a macro that comes in from 7:50 to 8:10, and I want to see them push it into this buy side. The macros are run on buy side, or sometimes can be manipulation. I've seen it where it is a kind of manipulation, and I've seen it where sometimes it's a run on buy side or a run on sell side. So we have to see where they push it into. Do they push it below this low here and then start trade higher, or do they push it into this buy side and start trade lower? I mean, either of those options can happen, especially now that we're bullish. We might see them push it into that buy side. So the wicks can do the damage, that's obvious. But what's the momentum, especially this time here? If you're trading this, the momentum on midnight New York, you gotta have the momentum from Asia. Look at that, right? So you opened up here, trade lower. Look at that push. So from 550s, if you were to buy 550s, this candlestick's low is 545.46. So that's a 5 points drawdown, and you can see how they pushed it higher. So we have 2 minutes until this macro comes in, and I want to see them push it into these highs here. So from 550s, especially inside this inefficiency, we've had that push higher. And I talked about this 15-minute. I want to see how we trade with this 15-minute. If you go into the nitty-gritties of this 15-minute chart, you can see the wick here, and the midpoint of that wick is 564.41. So we've not closed above that wick, but we've tried to trade into that wick. So I want to see how they run it and run into that buy side, because that buy side is this here. So I'm going to let that stay there. So that's a nice traction from that inefficiency. You can see the bodies, they're closing on the upper portion of that inefficiency. That inefficiency is important because, one, we're trading, it is embedded with the midnight New York open. It's embedded with the midnight New York open, and it's going to tell us if price has an interest to run higher or run lower. And you can see I've talked about how I wanted to see it close on the upper portion of that inefficiency, and we've closed above it. We've run lower into 550s, and you can see that run higher. This candlestick's high is 546. I mean 566, sorry. And now the macro is in place. So best case scenario, I want to see it run to that 550 level. We're gonna buy that 550 level, and we'll see whether we'll get that run higher. Because this is a nice reaction higher. So we're trading 555. $54, 53. So both that 550 level, bought at 549.94, and you can see the draw lower. So we've run below this low here, away from this inefficiency. We're trading at 540s now. This is not really interesting, but let's wait and see. So that is if I were to buy it at 550, that could be 12 points drawdown now. So we're into this inefficiency here. Try to run higher here. We did not reach into even 570s. We reached only into 566, and then we've opened up this new candlestick here with the macro, and we ran lower. I've talked about how this macro behaves. It can be a form of manipulation, or it can be completely a change in momentum. So you can see where we've opened up, we've ran lower, we've ran through that inefficiency, which I did not really want to see a price run through it. So I've tried to buy this, not tried, but I bought 550, and you can see how it's trading now. So you're gonna remind yourself what the momentum is, and I made a video, a cutout from what I talked about on Friday, how to maintain your bias. You gotta remind yourself why you're in a trade, especially on this time here. There's normally a very momentum that is very consistent. So you gotta remind yourself why you're always in a trade, if you are in a trade. I've talked about this bullishness here. Obviously, we've seen all these higher lows, and whatever price has been doing, we've made this kind of like moves lower here, but eventually trades through them, and it trades higher. We made this move lower here, we start moving higher, very small movement lower, and we ran higher throughout this high here and this high, very sharp movement lower, but you can see how it trades higher. And now we ran lower, ran higher. I've talked about this inefficiency. We're going through it. We're remaining with 1 minute. So that inefficiency again is gonna be, now we've closed below it. So that is I'm being skeptical again about this price action. But what's the momentum? We are bullish. So we're trading inside this macro, and we might have to go below this low here and then maybe start to have a move higher. So that's a 20 points run lower, and I don't want to be inside this price action when it's like this. So we've gone below that low. This low is 20,530.83. This low is 530.48. So we've gone below it. And I talked about how this macro here behave. So we ran lower, and now we are running even a lot more lower. So from where I bought it at 550, we're 20 points down. So I've talked about how these macros here can be a form of manipulation. And manipulation is when we're trading higher, look at the last swing low. We can trade below that swing low and then start to move higher. That's completely normal. I've seen where it does that before, and I talked about it. So you must be able to expect that kind of manipulation. So that's why I'm holding on to this trade here. But if we start moving far away below this low here, and now that we've closed below this inefficiency, then I'm looking at these relative equal lows here, this low and this low. And we might be running into that sell side. And now that we have the new wick opening gap below us, we might have a run into these levels here. So those are real typical lows here, that is sell side. Now let's see whether we'll trade way far below this low here and trade into this low here, or it will just take out this low here and start trading high. I mean, that's what I want to see. So we're remaining 2 minutes, and then we're going to open up with the new 15 minute and the new 1 hour. So you can see I highlighted this week here, and I talked about how we've not closed above that week, and I was expecting price to start running higher, but it didn't. It did not. So we ran into that here and then had this rejection and run lower. So we're running below that low at 329. So I think we're gonna run into that sell side. And inside this piece of price action here, we have this wick here, and you can see how we've ran through it, and we're remaining on the lower portion of that wick. It's important because these are swing low, and we treat wicks as gaps. So I'm gonna have to take this in on a loss and maybe look for another trade entry, or we'll wait for tomorrow's price action. So I think that's really it. I'm gonna take that out. I don't want to take that out after we've run into that low here. So there we go. So we're gonna be looking at how price trades around that week right there. Now that we've gone through it, I've talked about how price can reverse completely on this first macro, and you can see what it's doing. Now that we have this new wick opening gap, we might run into that. So we've opened up a new 15-minute candlestick, a new 1 hour. Let's look at this 1 hour chart. And I talked about how I wanted to see price run into those relative equal highs here, but you can see how we've had very huge run lower. So I've talked about how we can have some form of manipulation, and you can see we've run below this low here. So if we start running higher back into that 550 level, I'll be buying that, and price can really assume this sell side here and start trading into this inefficiency here and back into this buy side here and even higher. So you can see we've ran lower below that low here, and you can see it's back up. So we have this other inefficiency here, and I want to see price go through it and remain on the upper portion of this here and start trading it back into this high. So you want to be sticking with the bias, even though price can retrace against you. You want to be sticking with that bias. Let's look at this 15-minute again. So we've gone further away from this inefficiency, on which I wanted to see it find support here and start trade higher. We ran lower. I bought it at 550, and then it just kept on trading lower, and we've ran out this low here. I don't really wanna be in that trade still, and I mitigated it at around 20 points. Now we're trading higher. So if we get back into this here, I'll still buy that 550 level and try to get a run higher. And this can all just be some form of manipulation. We've ran below this low here, and the momentum is gonna be back in place, and we're gonna be trading higher. So you can see the rejection there with this wick. We bring back into this inefficiency here, and you can see the rejection. So with that kind of rejection there, we can trade below these relative equal lows here and even trade a lot more lower. Remember I talked about this new wick opening gap, go lower. So we've closed up on this 5 minute, and you can see we're trading lower. And I've talked about this sell side here. So we're trading at 520s now. So from 550 to 520, that's a nice and interesting run. So you can see the nice run into that sell side. So what you can get from today's trading is the tape reading, what we look at. I mean, that's the most important thing, and how you expect price to trade. Sometimes you can be wrong, like I was here. And you can see how it traded here. And I want to see bullish prices, but we ran through it, and you can see how weak we are now, and we've run into this sell side. So if we run lower, a lot more lower, I will wanna expect price to trade into this sell side here. You can see this inefficiency here. This is the one that I talked about earlier that we never touched. So we might expect price to run into that one. I'm going to extend that out to 8 also. Let's do 9. And you can see it right there. So what I'm expecting to see is this some form of manipulation, and maybe we'll start moving higher, or has it really changed its course, and we're going to run into this inefficiency and eventually this new wick opening gap. So that's what I'm keeping track of now. Have we ran this sell side here so that this can be some form of manipulation and we start running higher? Or have we really changed course and maybe we'll start running into this internal range liquidity pool here? And how do we run through that? So you can see the macro here started here at 750 to 810. This is the last candlestick on the macro, and you can see it's just an opposite of what the momentum has been. So it's important also to wait for these macros here to trade fast, and then where they push price, you're gonna go with the momentum. So you can see the loss here. It's not like anything I'm hiding. Just ignore all this here. You can see the loss here from 549. That's around 550 level. I was trying to buy that 550 up to 528. That's the L I've taken today. So normally if I had a funded account, that could be it for today, and then we come back and see what we'll trade tomorrow. But I'm gonna keep on tape reading, and then we'll see whether we run into this internal range liquidity pool here, or we'll just turn right here. So this sell side here was below this candlestick slow, and this candlestick slow is 20,517.71. So 517.71, and this candlestick low, we've gone up to 511.71. So 6 points below that low. So that's a sell side drain out. Sell side has been drained out right there. So I'm interested to see, do they want to push it lower now that we've drained this sell side, or do they have an interest still for higher prices? So for higher prices, I want to see price run into this wick here and stay on the proportion of that wick for higher prices. For lower prices, also the complete opposite. I want to run into this wick here, and I want to see price stay on the midpoint of that wick here and lower. If it does not trade into this wick here, then we are really weak and we'll run into this here. If we trade into this wick here and stay on that proportion, then we'll really be bullish, and maybe we'll trade into that buy side. All I'm really saying is the momentum is still bullish now that we've drained this low here, this low here, and this low here. And I've talked about how the macros behave, and this is really the spectacular work of a macro to run against those who have been in the marketplace. I mean, since we opened up here in Asia, everybody has been thinking that we're trading higher, and now that we've had the first macro after the midnight New York Open, they must run the stops of these people who have been bullish. they must run the stocks of people, those people who have been bullish, or anyone like me who has been trying to buy right there. And you can see the way we've had this kind of price action here. It was spending a lot of time here, but then we opened up with this macro and then we ran through that low here, this one here, and even the relative equal lows here. So we're back up again. We're inside this wick here. I've talked about how if we want to be weak still and want to be trading into this internal range liquidity pool here, I want to see price remain on the lower half of this wick. It could be best if it does not really reach into that wick, but now that we've traded back into that wick, then we might be again visiting this inefficiency here and maybe trading higher. So we've ran into that wick here. I'm interested to see where we close on this 5-minute candlestick. That's the most important thing. Remember, the wicks do the damage, but this is the most important storytelling instrument. So first things first, you must know how to tell the narrative. What tells the narrative? Inefficiencies is basically inefficiencies and the liquidity pools. Liquidity pools are above swing highs, above old swing highs and swing lows. And liquidity pools are not necessarily above old swing highs and swing lows. They can be inefficiencies. Price only does only those two things. It trades into liquidity pools and it trades into inefficiencies. That's the market. That's what price does. It trades into liquidity pools, it trades into inefficiencies. So how you read the price action on inefficiencies and on liquidity pools determines on how you can predict price. It determines on how you can predict price. And to make it even better, we're waiting for the close of the candlesticks and then we're gonna expect price to behave in a certain way. So we've run through into this wick here and you can see we are running away from it. So this to me is weakness, this weakness. So I'm gonna be expecting price to run into this internal range liquidity pool here around 500 big figure, and then we're gonna see if we reach into 570s and then 470s and then 450s down here. And you can see we're running lower. So we've gone below this low here once more. So this is important. So my trades are normally around 808. If I were to be trading at 808 inside this candlesticks here, I will be bearish, selling that 520 level. So we've opened up these candlesticks here, and the high is 537. So if you sold 520s, then you could be having a huge retracement of 17 points, and then this run lower. So we've run below this low here again. I've talked about I wanted to see price trade around this week, this premium week here. Price ran into that week here. I guess we ran into the upper portion of that week, but you can see where we've closed down here, further away from that week. So that midpoint is 535.39. This candlestick's high is 537.86. So we went above that with 2 points and we're back down. So we've opened up this 5-minute candlestick here. We're running lower. So to me, this is a weakness. So I think we touched that No, we've not touched 500. We're trading at 5 now, but we've touched 502. So how we trade around this inefficiency here will also be telling the narrative of how we run into these lows. And you can see how it's moving lower now. We're trading at 501. That's interesting. So the bullish bias that I had coming in has been completely overtaken with the fact that we ran lower with the macro and we're still running lower. And sometimes that can happen, especially now that it's Monday. Price is not really going to do a lot in the form of momentum. It's going to do these kind of things. If you come in on Tuesday and Wednesday and Thursday and Friday, it normally has a very nice run on momentum on this kind of this time. So time is 8:18. I'm gonna be here until around 8:30 now that we are far beyond our time of trading. I'm gonna close this at 5 in the next 14 no 12 minutes or so. So I've talked about the narrative that we've had this morning. It's just that we've not had the right form of momentum from where we're trading at up here. I was expecting price to start trading higher into that buy side, but it did not. So this is where you can also be wrong. This is also where you can also be completely wrong. We've had this run higher here. We've had this decline here. We ran higher, took out this buy side here, and then we had this rejection here, and now we were trading around here. So my bias was bullish. I was expecting price to start running into this buy side, and I was looking at this inefficiency here. So we had this price tick above the upper portion of that inefficiency the way I normally expect, and then instead this kind of stick here we started running lower and they bought it at 550. So after buying it at 550 we did not start to move higher the way I was expecting, and then we had this rejection and we ran lower, and now we are still running lower. So this is the macro comes into the marketplace, tries to run against those people who are in the marketplace. Those people are trying to chase price, runs against them. So that is like me, it's the retail traders, and it ran against my stop. So it ran against me, and now we're trading in below this sell side here. This relative equal lows here, and now we are so close to this internal range liquidity pool, and is an inefficiency. Price likes to trade into inefficiencies, so we're going to be waiting to see whether does it have an interest to run into this inefficiency, or does it have an interest to start running higher. And now where we are, I've talked about this week here and price and how price should behave around that week. And to me, the bias is now bearish. We're going to run into that inefficiency here and try to run into this new week opening gap. I guess it's going to do that before it runs into these relative equal highs here that I talked about. I've been talking about those relative equal highs there since Friday. So I've talked a lot about what has happened today, and I think that's gonna be it for today. So until we trade again tomorrow, adios.